You're listening to Smart Metals Radio from the Hard Assets Alliance.
Hello and welcome to the Smart Metals Radio Show from the Hard Assets Alliance with me, your host, Andy Duncan. My special guest today is Bradford Cooke, the CEO of Endeavour Silver Corporation and the Canard Resources Corporation. Today we'll be talking about Mexico, mining, and the difficult interface between recently declining precious metals prices and rising metal mining prices. Hello, Brad.
Hello, Andy, and thank you for having me on.
Our pleasure. When many people think of precious metals mining, they kind of instinctively think of South Africa or Australia or Canada, while Endeavour Silver is focused mainly on Mexico with, I believe, 4 mines. How valuable do you think Mexico is as a metals mining hub?
Oh, my goodness. The natural mineral endowment throughout Mexico is amongst the best in the world. But for various reasons, Mexico was grossly underexplored for many decades and really only opened up to foreign investment for the mining sector when Mexico joined NAFTA in 1993. So we've had now, a 20-year boom of mineral exploration, discovery, development, and production in Mexico with discoveries of some fabulous new deposits, for instance, the Peñasquito gold-silver polymetallic deposit now in production. It's a gold quartz mine in Mexico. So that's just a tip of the iceberg in terms of the what we feel is prolific mineral potential in Mexico. So it's a go-to country.
Now, we've had NAFTA then since 1993, 20 years ago, but there's been kind of recent problems with drug wars and so on in Mexico. I was recently in Acapulco, and this was extremely heavily policed, even though it seemed entirely peaceful. What are the political risks and circumstances for your company while you're in Mexico?
That's a very good question, and I would say that Mexico for the last 2 decades has had a very significant competitive advantage looking at all aspects of mineral exploration and foreign investment over many other Latin American countries, most other Latin American countries, for the simple reason that it's closest to North America. It since 93 has had a relatively stable democratic government. Thanks to NAFTA, there's been literally not only an economic boom for 20 years, but the growth of a middle class, which spurred infrastructure development. The Mexican people themselves are very hardworking, and they have this wonderful 400-year culture of mining, so they're not automatically against it. In fact, most Mexicans are sympathetic to mining. Many good reasons to be there, in addition to what was until very recently one of the most attractive fiscal regimes, tax policies in the Western world. Of course, that came to a screeching halt with the passage of some new mining taxes just recently. And so to answer your question, I feel that while Mexico is still a go-to country for mineral endowment and stability, even this war on drugs and the security issue is in very, very select places. And I think it is safe to say most of the mining companies active in Mexico are concerned about the security situation, but I don't believe there's been many direct impacts of the war on drugs on mining. Certainly speaking for Endeavour Silver, we've had no direct impacts as a result of the security situation.
Getting onto these taxes, Mexico, I believe, is introducing new and extended rates on corporation taxes, dividend taxes, environmental taxes, and most particularly of all, royalty taxes, which I think are coming in on January the 1st. Why has Mexico become so tough on miners, and why do you think it's potentially killing the golden goose that's laying its silver egg?
Coming back to that 20 years of competitive edge, Mexico, I feel, is shooting itself in the foot when it comes to foreign investment in mining. I think that the new proposed taxes, which do become effective January 1st, will have the opposite effect of what they were hoping. Obviously, the government was hoping to increase its tax collections from the mining industry. Their rationale was, I think, flawed. First of all, that mining didn't pay its fair share. Well, of course, we're a cyclic and capital-intensive business, And we make good returns on our investments at the top of the market to make up for all the losses at the bottom of the market. And we're certainly in a deep correction mode right now, so their timing couldn't have been worse. Long-term ramifications of the new Fiscal Reform Act and the new mining taxes are simply that we will pay more tax, which means there's less profit, less money available for reinvestment. And for that reason, I believe that many Mexican miners, while continuing to work in Mexico, are now starting to look for new projects outside of Mexico. And again, for Endeavour Silver, we're certainly reasonably aggressively looking in select other countries in Latin America, because Mexico, with the new fiscal policy, has almost leveled the playing field.
Okay. Are there any particular countries in mind there, maybe Peru or somewhere else?
Certainly Peru, Chile, even Brazil. These are attractive jurisdictions from the overall point of view: mineral endowment, political stability, tax regime, etc.
Now, one of the problems with the royalty tax is it's based on EBITDA, which is the earnings before interest, tax, depreciation, and amortization, and that means you can't deduct the depreciation of your capital equipment. Is there any way you can get round this sort of legally and nicely, or do you just have to take it on the chin?
I know that there are still discussions at a high level with the Secretary of Economy with regard to what deductions will be allowed in Mexico, so that I think there's still some leeway to be determined there. But perhaps more importantly, what we know is that what we pay in EBITDA tax is actually deductible from what we pay in corporate income tax. So while it's not good news for miners, at least there's some relief.
Okay. Just on a slightly tangential note, the Mexican Hugo Salinas Price has been working a long time on introducing a silver-denominated peso into Mexico. Do you think he has any chance with this? And if he does manage somehow to do that, do you think there'll then actually be a political premium for having silver mines inside Mexico?
I actually think that the right time for that is ahead of us and will arrive. So, yes, I think that there is a chance. I don't know how good a chance, but certainly a chance for Mexico or other countries to base their currency on something of eternal value, like silver. That's what gold and silver used to be millennia ago. The original form of currency and store of value. And I do believe that the elephant in the room for the entire financial sector in the Western world, and therefore impacting gold and silver, which is the two precious metals, are directly linked at the hip to what goes on in the financial markets. I think that the level of debt and deficit in the Western world is unsustainable and has to be dealt with at some point. And that could lead to hard currency like a Mexican silver peso.
Well, it'd be great if that happens. Someone who'll particularly like it is the Mogambo guru, who I spoke to last week, and he puts 70% of his money into silver, 25% of his money into gold, and 5% into oil. Do you think he's got the silver-gold investment ratio right there?
Well, I'm a silver and gold bull, and I can't argue with a bit of oil either, so I wouldn't disagree. My own exposure is probably even more towards silver at this particular time, even though I do love gold as well.
Okay. Now, getting on more generally to gold mining and silver mining, and not just Mexico, after a long rise in precious metals over the last 10 years, they've sort of fallen away in the last 18 months, 2 years. Yet prices for fuel and huge tyres for mining trucks and wages and all of the kinds of mining supplies have continued to rise, especially as they're mostly priced in dollars, which have been printed. A lot of dollars have been printed. How is your firm dealing with rising capital expenditures because of dollar inflation and against declining metals prices, hopefully, which will only be in the short term?
So that's really two interrelated subjects, right? The metal prices having fallen into a deep correction and costs ignoring that and continuing to rise, and not just CapEx. We're talking about operating costs across the board. So let's talk about metal prices first. I think it's clear that, my position is that the strong run-up in gold and silver prices in particular in 2009, 10, 11, peaking in 2011, is a measure of the depth of this correction. So, I always measure the peaks as relative to the corrections and vice versa. And so we are now entering the third year, have already entered into the third year of this, what I think is a correction in a bull market. And I think the depth and length of this correction was actually predicated by the length and strength of the run-up in the metal prices 2009, 10, 11. So even though I'm not happy about having to, survive a tough market like this, it's ephemeral, it's temporary, it's not going to last like this for forever or even for much longer. And so how does that impact how we run our company? Well, obviously we have to make sure of our survivability at lower and lower prices, but I do believe that the bottom is near, if it hasn't already been put in. And we just have to be patient and make sure that we can continue to make money at these prices so that when the market does turn, the company is well positioned to be a star performer. Now, on the cost side, that's a tougher one. Everybody had to cut costs this year when gold and silver fell out of bed in April and again throughout the year, actually. So, like most other companies, we did launch a company-wide cost-cutting program, not only CapEx, but exploration and operating costs. Many of our changes on operating costs were actually long-term sustainable changes. We were able to do some major layoffs at our mines where we thought we had some fat. We were able to introduce more efficient work methods, for instance, long-hole mining at 2 of our 3 mines and soon to be 3 of our 3 mines. That's a higher productive, lower cost mining method. So that's our response to lower metal prices, and as a result, our cash costs of production came tumbling down this year. They averaged $10 an ounce of silver produced in the first half, but in the third quarter, we were barely $5 per ounce of silver produced on a cash cost basis. So that was our response to cutting costs, and we are finally seeing some relief on capital expenditures. We're seeing the costs of plant equipment and even consumables like cyanide starting to come down again.
So you'll be in a great position when silver and gold prices start going up then. Now, I'm not going to hold you to this because no one can know the future, but when do you think we'll start seeing a definite lift in both the silver and gold price? And what do you think perhaps the gold and silver prices will be in, say, 2 years' time?
Oh, crystal ball gazing is a dangerous thing, and I have opinions. They're based on both fundamental and technical analysis, but timing is always a dangerous issue. All I can say is that we're bulls. We think we're nearing the end of this correction in a bull market. We think 2014 will be pretty tough for at least the first half, and then the tide might have turned by the second half of next year. If we look out 2 years, I guess I'm thinking that certainly back to 30-plus silver is doable. And on the gold front, I guess that would mean, 1,600-plus gold. And beyond 2 years, I can't name prices or timing, but I can certainly say that we think that there will definitely be a retest of the 2011 highs, and I think new highs will be made.
Well, I admire your bravery because most Australian economists I ask that question to run screaming into the hills and won't answer me. So thank you for that. Now, you also, as well as working with Endeavour, work with the Canard Resources Corporation, but they don't work so much in Mexico, but concentrate more on gold mine development in British Columbia and Canada and so on. How is Canard doing in all this difficulty with the gold environment?
Well, it's probably a good example of the vast difference between running an operating company with cash flow and profits, that's Endeavour, and running a junior explorer dependent upon the financial markets and stock investors to fund its ongoing programs. Suffice to say, Canard had a very quiet year. There's not much money in the treasury. We have a core asset. Our main goal is to not only confirm that we hold title to that asset. That's easy. It doesn't cost much. But to seek a partner, an industry partner, to develop that asset on our behalf, we'd rather do that than blow up the equity of the shareholders by issuing, millions and millions of shares at cheap prices, especially given my view on the gold price.
Okay. Well, it's been great speaking to you today, Brad. Can you tell our listeners where they can find out more about Endeavour and Canard?
Well, I would urge your listeners to visit our websites, www.edrsilver.com for Endeavour and www.canarc, CANARC.net for Canard.
Okay. Thank you for your time today. Bradford Cooke, the CEO of Endeavour Silver.
Lovely. Thanks for having me on.
Subscribe to the Smart Metals Radio Show on iTunes. You can also visit us online at hardassets.com/radio, where you can subscribe to our free mailing list and receive our podcasts in real time, as well as receive our free Smart Metals newsletter. Find us on Twitter at Smart Metals Trade, like us on Facebook on our Hard Assets Alliance 2012 page, or subscribe to our YouTube channel, Hard Assets Alliance. For anyone who wants to set up an account with the Hard Assets Alliance, as a special offer, we shall be waiving opening and setting up fees. Just visit hardassets.alliance.com. Listeners who'd like to speak to a live rep to walk through the registration process can call 1-877-727-7387. A special thank you today to Brad Cooke for joining us on today's programme, and thank you very much for listening. Until next time, goodbye.